Good morning, traders. I'm Michael Sabo, Senior Commodities Broker with RJO Futures here on Monday morning, October 21st. Bringing you some commentary here in the energy market. So let's get started. Well, crude prices here taking a weaker tone. Check out my commentary, my post there last week. Kind of that was my thought process, that we might see crude prices continue to weaken here a little bit. Right now, December crude oil is down roughly about 89 cents. We're trading just over $100 a barrel, right around $100.22. Low so far this morning, 99.79. So breaking that all-important psychological $100 a barrel area. The Brent is also weaker here, but only off about 15 cents, trading around 109.79. So we've really seen that spread kind of widen out. Talked a lot about this spread. If you want to learn how to play WTI versus Brent spread, or get a better understanding of it, give me a call, shoot me an email. We can get into more detail. Nat gas weaker as well. It's off about 4 cents. And the complex weaker. No surprise there. We're off about 50 to about 150 ticks right now. So weaker tone overall. Now, one of the things that we're seeing is we are seeing equities markets actually firmer. S&P, hitting record price range there last week. We've seen that a little bit firmer here, but quiet range, but it has been a little bit firmer. EIA data, which did not come out last week. I talked about that in my post due to the partial government shutdown. We're expected to see those numbers come out here for the week ending October 11th, and traders are looking for that build of about 2.5 million barrels. And what I told you last week, if you check out my post there, was that, EIA is what traders, mostly pay attention to, but because that didn't come out, we switched gears. We were watching the API, American Petroleum Institute, so a private organization, but looking to get our data and our information out of there, which we did get there, and it did allude to a build in the stockpiles. So we'll look for some confirmation from that here this week, but nonetheless, I think we're going to continue to see builds here. And remember, and again, I've talked about this in a lot of posts here, take a look at our current stockpiles versus year over year or the 5-year averages, and we've got plenty of oil out there, in my opinion, and that demand remaining to be very questionable. Now, the one thing here that I was reading this morning is that the Fed, no surprise here, but is looking at continuing here with their loose monetary policy well into 2014. So I still think oil prices are going to come down, but remember, this cheap, easy money generally encourages a little bit more of a risk-on type attitude. So in other words, that could lead to some buying in oil. Now, I don't think crude prices are turning from here and shooting straight up. In fact, I think the opposite. My opinion is I think crude prices are still going to continue to weaken. 200-day moving average is right around about $99 a barrel, but ultimately I think we could move into the mid-90 range. So again, give me a call, shoot me an email. We could talk about specific price points and targets and things of that nature. One thing I think it's important to point out, and I talk a lot about, about the oil and the supply of oil that we have, and I was reading some information here over the weekend. I thought this was important to share with you. North Dakota. We know we got a lot of oil production coming out of North Dakota here, but over the last 6 years, it has gone from about 100,000 barrels per day on up to about 910,000 barrels per day of oil production. To put that in perspective here, North Dakota is now producing more oil than Ecuador. Ecuador is an OPEC country, so you can see the type of oil production coming out of there. And if this stays on pace, okay, the trajectory that it's been on here, it's soon going to overtake Libya in oil production. So we've got a lot of oil production going on here in the States. And if we continue at the pace that we're on in a lot of areas, that's why they're talking we could have oil independence here by possibly the year 2020, and maybe even sooner than that if this administration as well as future administrations kind of cooperate here and allow some additional drilling. And that should help translate into lower prices. So I think you've got some real opportunity here, not just in the short term, but for those of you that are really forward thinking, that are thinking down the road, a year or 2 or 3 out. I think there's some real opportunity to take advantage of these markets. Give me a call, shoot me an email, and I can fill you in on some short-term as well as long-term strategies. Or if you're a bull in this market, I can certainly help you with some ideas there as well. Right now, I've got some ratio spreads I'm looking at here for December oil here, making some plays to the downside. Again, give me a call, shoot me an email. I'll elaborate on that in more detail for you. Of course, keep in mind that, futures trading does involve a substantial amount of risk, may not be suitable for all traders. Good luck and good trading.